Welcome to Words of Stardon. This is CH. I will be covering the Amova Japan Dividend Equity Fund in this video, which is part of my Absolutely Biased Comments or ABCs series. The aim of this series is to cover one fund per video to share how an individual investor can try to find out more about a fund from public sources and do some basic research or simple due diligence on the fund before deciding to buy the fund or walk away. Some quick disclaimers before we start. This is not a product sales pitch or a recommendation to buy. I'm not sponsored by anyone to do this video. Please do your own research and be clear about the product features and risks before taking any action. This video is done as a follow-up request from a viewer's comment in my previous video covering the Amova Singapore Dividend Equity Fund. If you would like me to cover any funds or ETFs, do drop me a comment in any of my videos, and I'll be happy to work on it as long as I can find enough information on the product. Amova Asset Management is the rebranded name from what was previously known as Nikko Asset Management. The company was formed in 1999 from the merger of Nikko Securities Investment Trust and Management and Nikko International Capital Management, while the rebrand was done recently in September 2025. I personally like Nikko Asset Management as a better identity for its origins, so I don't really understand why the rebranding needs to be done, but that's just me. Amova is a directly owned subsidiary of Sumitomo Mitsui Trust Group, a big conglomerate in Japan. While having a strong Japanese heritage, Amova brands itself as a global asset management firm and operates in 10 countries and regions globally, managing over $270 billion of AUM as of September 2025. Amova's product solutions outside of Japan onshore mainly revolve around Asia in both equity and fixed income aspects. There are efforts to produce more global solutions, but this is not easy, especially that the number of competing fund providers and fund solutions have grown significantly over the years. On the equity side, Amova recently seems to be taking advantage of its heritage to focus more on various Japanese equity strategies. The Amova Japan Dividend Equity Fund is set up as a Singapore open-ended stand-alone unit trust, meaning there is no fund family and the prospectus is dedicated to the fund alone. The fund is registered as a MAS authorized scheme, which means it is suitable for retail investors. The prospectus is currently still the old version and therefore reflects the old Nikko AM branding and fund name. It should be updated accordingly by early next year. Amova strangely doesn't provide fund manager information in the fund webpage and documents, but instead has it mentioned in a separate strategy webpage. The Japan Dividend Equity Strategy, which obviously includes the Amova Japan Dividend Equity Fund, has Toshinori Kobayashi as the lead portfolio manager and the team leader of the Research Active Management team. There is, however, no mention whether the fund is co-managed by anyone else from the team, and no further details on the capabilities of the team. Morningstar shows that Toshinori is the only manager for the fund since its inception in 2013. Toshinori's bio in Morningstar, however strangely, states he is a backup portfolio manager. In any case, the bios states that Toshinori has been working in Amova, or previously Nikko, since 1988 as his first job. Therefore, he is a very seasoned fund manager in the firm. While Amova is a Japan company and this is a Japan equity solution, it is a pity that Amova did not provide much information on the capabilities of the investment team, as I believe there should be plenty of good marketing points that Amova can talk about. The Japan equity market historically had hardly any dividend plays. Most companies traditionally preferred to hold cash piles for potential future plans instead of paying out some of it to investors. Things have changed in the past decade though, as more Japanese companies open up to foreign investments and ownership, and that led to corporate restructuring and a change of mindset in dividend handling as per demanded by the foreign investors. That being said, the dividend scene in Japan is still developing, and not all sectors and companies are receptive to it. The Amova Japan Dividend Equity Fund provides the investment objective and a brief investment strategy in the fund webpage and fact sheet. As the fund name implies, the fund invests in Japan equities listed and traded on the Tokyo Stock Exchange. The fund's objective is to provide a total return over the medium to long term, and the total return is a combination of capital growth and income. The fund previously had a benchmark, which is the Topix Total Return Index, and the benchmark is used for performance measurement. The benchmark was removed in 2017, meaning the fund no longer has any benchmarks or performance targets now. I do not understand the rationale of an active fund having no benchmarks or performance targets, as it means there is no way for investors to assess if the fund is doing good or bad. Amova actually has a few different Japan equity funds in its offering. Given the dividend in the name of this fund, the brief investment strategy states that the fund will mainly invest in Japan equities that have relatively strong sustainable cash flows, stable growth, and stable dividend payout. There is also a mention that the fund can allocate up to 30% in cash, primarily during significant market stress. Let's find out more in the fund prospectus. The prospectus unfortunately provides nearly the same information on the investment strategy. Again, for a Japan fund provider and a Japan equity fund, I would have expected Amova to provide more details on the investment process to showcase its capabilities. So this is pretty disappointing as well. Further details on the investment strategy and process of the fund are actually found in a separate strategy webpage. It is strange why the information is not available in the fund-specific webpage, and there is no mention in the fund webpage that this separate strategy webpage is available. In any case, from here, there is a more elaborate description on the philosophy behind the fund, which is again to look for strong companies that can generate high, stable, and growing dividends. There is a specific mention here that the investment team emphasizes on the interactions with the management of the companies they review and invest in. The strategy webpage continues with more details, where we can gather that the fund is primarily a bottom-up stock selection approach, using 12-month forward dividend yield screening, followed by further research and filtering for high-quality companies that meet the dividend criteria. The result is a concentrated portfolio of around 50 stocks. There is even a nice picture on the investment process and also a summary of the various stages of the stock selection process. Frankly, all this information should be consolidated in the fund webpage as a single source of information for investors. I really don't understand why Amova has to create a separate strategy webpage like this. There is also another document called Fund Placemat that is available but slightly dated. The placemat presents the investment strategy in a different manner and claims the fund runs a balanced approach of seeking dividend yield and dividend growth, although the picture here shows a balancing of dividend yield and capital appreciation instead. I think this can be confusing to investors, and it would be better if Amova can standardize a single way to explain the fund. Let's look at the actual portfolio next. The Amova Japan Dividend Equity Fund, as expected, is base currency in Japanese yen. The fund, however, was incepted in 2013, initially with only Sing Dollar Hedge and US Dollar Hedge share classes. Fund AUM is over 90 billion Japanese yen as per October fact sheet. However, Morningstar shows that the fund has already grown to around 823 million US dollars of assets currently. Portfolio-wise, both the fund webpage and fact sheet provide only the sector breakdown. We can see that the fund's exposures are quite diversified, with the largest allocations in industrials, financials, and consumer discretionary. Let's compare the sector exposure with the two popular Japan equity indices that are Topix and Nikkei 225, using the iShares ETFs as a reference. The categorization used are different versus the fund. but we can still do some simple comparisons here. Looking at the sectors, we can see that Nikkei 225 actually doesn't have any noticeable financials or banks exposures, while electric appliances, which I would compare against consumer discretionary, take up about 1/3 of the index. So Nikkei 225 is very different from the fund portfolio. Topics, on the other hand, looks more similar, with about 13% banks plus insurance, and the rest more diversified across sectors compared to Nikkei 225. In contrast, the fund has the highest allocation to financials or banks, and slightly more technology than topics, but less than Nikkei 225. Industrials and consumer discretionary are two other large sector exposures, although they would need to be further split into the subsectors like the ETFs for us to make better comparisons. The fund also has about 7.5% in cash. The fund also runs a much more concentrated portfolio of 54 stocks at the moment, and we can see in the top 10 holdings that there is an effort to spread the allocation weights to reduce single position risk. The sector biases are also clearly seen here, with the top 3 holdings being the leading financial companies in Japan. In comparison, the Topics ETF has nearly 1,700 positions, though we can also see 2 of the 3 banks appearing in the top 10 holdings in the ETF. We can get some additional insight of the portfolio from Morningstar. From the factor indicators, we can see that the fund is slightly value biased and yield focused. Quality, interestingly, is in the middle, as I thought as per the fund strategy, it would invest more in high quality stocks. Momentum range looks all over the place, so it is hard to make much sense of it. Also interesting is the market size that looks to be on the lower end of large caps, possibly because the fund did not allocate to some of the very large market cap companies. Financial measurements are a bit more mixed. Worth noting are the rather low price ratios, suggesting the fund has a focus on cheap valuation stocks. Also important to note is the dividend yield of the portfolio is currently 3.56%. This means that if the distribution payout yields of the fund share classes are higher than this, the fund likely is using some of the capital to top up to the payout yields. That being said, 3.56% is still a pretty high yield number, as both Topics and Nikkei 225 currently have less than 2% dividend yield using the iShares ETFs as reference. The Amova Japan Dividend Equity Fund currently is available in 3 currency classes, that are the base Japanese yen as well as Sing dollar and US dollar. The Sing dollar and US dollar classes also have currency unhedged and hedged versions, with HGE referring to currency hedged. We will compare the performance differences later. The retail share class doesn't have any alphabets to denote it, while the institutional share classes has a B in the class name. All share classes of the fund are distribution classes. We will go through the distribution details in a while. Despite Japanese yen being the base currency of the fund was incepted in 2013 with only the retail Sing dollar hedge and US dollar hedge classes. Retail Japanese yen class was created only in 2022. The B institutional classes were also created only in recent years, suggesting Amova originally intended to design this product for retail investors only. Retail classes have a 1.5% management fee. Adding other expenses gives a total expense ratio or TER of around 1.7%. Up to 60% of the management fee may be paid by Amova to distributors as trailer fees. B institutional classes have a lower 0.75% management fee as no trailer fees are paid out. TER currently has a wide range, as these share classes are relatively newer and with less AUM, resulting in an unstable fee impact from other expenses. This should stabilize when the share class AUM gets bigger. The fund allows distributors to charge up to 5% subscription fees, although I think anything more than 2% for mutual funds is excessive. The Amova Japan Dividend Equity Fund currently provides the distribution information in a separate Excel file called Distribution Summary that can be downloaded from the fund webpage. The Excel file provides detailed data of the past 12 months of distributions for all share classes of the fund. From here, we can see that all the share classes have a monthly distribution frequency. We can also see that the fund seems to have set the same payout yield for all the share classes at around 7.1% per annum currently. This means that any fee-related differences in the share classes, such as retail versus institutional class fees or currency hedging costs, are factored into the share class NAV so that all the payout yield are the same. The current 7.1% payout yield is also on the high side compared to the average payout yield since inception of around 6%, suggesting that the fund can and will likely downward adjust the payout yield in a weak or bearish market environment. One thing I find suspicious in the data is that it is indicated for most of the share classes that the payout yield doesn't require capital to be used. This looks strange because earlier we saw that the portfolio's underlying dividend yield is only 3.56% as per Morningstar. So it seems impossible for the fund to have a 7.1% payout yield without getting some top-up from capital. Maybe Amova considers capital gains under the distributable income column, but I couldn't find any clarifications on this. Given the high distribution payout yield, the fund appears to have hardly any dividend growth between 2013 to 2023. There was some visible growth in 2023 and 2025, but only because the Japan equity markets have been extremely bullish these 2 years, and there were ample capital gains even after paying off the high distributions. As there have been no bearish market scenario in the lifespan of the fund, it is a question how the fund will behave and manage its distribution yield when that happens. The Amova Japan Dividend Equity Fund provides in the fact sheet the performance data across various time periods for all its share classes. At a glance, the return numbers look nice, but without any benchmark or performance target to compare against, we can't tell if these numbers are really good or bad. So let's run some comparisons in Morningstar. Let's first take a look at the different currency classes of the fund. The Japanese yen class was incepted only in late 2022, so it doesn't give us too much track record to compare. Given Japan runs a near zero interest rate policy for the past years, most currency hedge products investing in Japan will get a positive boost from the currency hedging effects, as seen in this chart of around 3 years long, where the Sing dollar hedge class gets about 16% more returns and the US dollar hedge class gets about 26% more returns compared to the Japanese yen class. As we need to find a way to get a longer track record of the fund in Japanese yen terms so that we can run better comparisons, one way is to use the Sing dollar unhedged class that was incepted in 2016, and we make use of the FX feature in Morningstar chart to convert it into Japanese yen. This will result in the Sing dollar unhedged class giving a near identical performance line as the Japanese yen class, as seen here. With this approach, we can then compare the Amova fund against the Topix and Nikkei 225 indices using the iShares ETFs that we looked at earlier. With nearly 10 years of track record here, we can see that the Amova fund has had a slightly weaker return compared to Topix, while Nikkei 225 has a notably highest but more volatile return. The year 2020 was a key attributor to these differences though, so let's look at a shorter time period as well. If we zoom in to the past 5 years instead, we can see that the reverse has happened, with the Amova fund inching out slightly higher returns than both ETFs in this time period. This suggests the active strategy and portfolio of the fund is working decently in recent years. I mentioned earlier that Amova actually has several Japan equity strategies. Another popular active mutual fund is the Amova Japan Equity Fund that was previously under the DBS Shenton Fund series acquired by Amova many years ago. This fund interestingly has only one Sing dollar unhedged share class, but has been a strong performer and as seen in this chart has outperformed the Amova Japan Dividend Equity Fund by quite a big margin. From a performance perspective, the Amova Japan Equity Fund is therefore clearly superior compared to the Amova Japan Dividend Equity Fund, except that it doesn't have a currency hedge class. Another solution from Amova is the newer Amova Japan Value Fund that was incepted only in 2023 and is a Luxembourg domiciled fund. While the track record is short, it can be seen in this chart that it has also performed better than the Amova Japan Dividend Equity Fund. So our main fund in this video has some tough competition from its own shop. Let's compare the fund with other solutions in the market. In US dollar terms, the Amova fund looks to have performed well versus most active mutual funds. The only better performer in this chart is actually WisdomTree Japan Hedge Equity ETF, although the ETF was noticeably weaker in the earlier years. Sing dollar wise, there are less Sing dollar hedge solutions available with a long track record. Here is a comparison chart of the Amova fund versus Eastspring and Lion Global. The eventual returns are quite similar, with Amova slightly better than the other two. Amova, however, seems to have the least volatility during the COVID period though. Why shouldn't we consider the Sing dollar unhedged classes of this fund and other funds? This is because the Japanese yen has been deliberately kept weak by the Bank of Japan's policy, and therefore the Sing dollar unhedged class suffers significantly in terms of performance as seen in this chart. Therefore, when it comes to Japan equity investments, be very careful and double check whether the product is currency hedged or unhedged. With that, let's summarize our findings. Amova Asset Management, previously known as Nikko Asset Management, is an established Japanese asset manager that is relatively small compared to the popular global fund providers, but is decently recognized in Singapore and Asia. For a Japanese firm and a Japan-related investment solution, there is very little information provided on the fund manager and the capabilities of the investment team. I would have thought this is a key selling point, and Amova should elaborate more on this aspect. There is actually ample information on the investment strategy and process of the Amova Japan Dividend Equity Fund, and would have been really useful for investors to understand what the fund is doing. Unfortunately, the information is scattered across different web pages and documents. The fund essentially runs a bottom-up stock-picking strategy looking for high-quality companies with stable and growing dividends. The active management of the fund is visible, as the portfolio construct is visibly different from the main Japan equity market indices of TOPIX and Nikkei 225. The fund has a standardized high distribution payout yield of 7.1% per annum across all the share classes, meaning fees and currency hedging costs are all factored into the NAV. It is therefore a potential concern that the fund may not see much meaningful NAV growth over time. And also, it is questionable how the fund will behave in a bearish market, which it hasn't experienced in its lifespan yet. The long-term performance of the fund looks pretty decent, having outperformed most other active products in the category. It is, however, important for Sing dollar and US dollar investors to ensure they invest in the currency hedge share classes. Otherwise, the results will be very different. On a separate note, Amova does have another Japan equity fund that seems to be an even better performer, but is only available in Sing dollar unhedged class. In conclusion, the Amova Japan Dividend Equity Fund looks to be a decent Japan equity solution. It does have a specific focus on dividends in its strategy and also provides a high distribution payout instead of accumulating capital gains. Therefore, it serves to cater for investors who have such interests. This concludes my absolutely biased comments on the Amova Japan Dividend Equity Fund, and I hope it will help in your investment journey. May we all grow wiser and prosper.